Everyone. Today we're doing lesson 12.4, and in this lesson, we will be preparing payroll checks and ultimately paying our employees. So, by the end of this lesson, you will be able to justify the use of a payroll checking account and prepare employee payroll checks. So, most companies are going to have a separate checking account to help protect and control payroll payments. And then the payroll checks require space to record earnings and deductions information. So, you're going to be able to issue these special payroll checks directly from your payroll account. The exact amount needed to pay the payroll is deposited in the payroll checking account prior to issuing these checks. That's going to help you to better keep track of your payroll. So you're ultimately taking that money and moving it into from your regular account to your payroll account. So you could do this with an electronic funds transfer. Here they're actually writing a check out. So what you're going to do is prepare the check stub. So you're going to say the payee is First American Bank because it's again, you're paying one account from the other account. The total that you owe all of your employees is what's going to be transferred into the payroll account. So you're preparing the check stub, the date, the payee, the description, the amount, and then you're preparing the check information on the check. So you're going to put who you're paying to, and again, it's one account to another account. And then you're ultimately going to be adding all of those dates. So the date, the amount, and sign. Whoever is responsible for payroll is going to be able to sign. So we have a voucher check, and that's a detachable check stub or voucher that contains detailed information about the cash payment. So it's going to be recorded on each employee's payroll check voucher, and it comes from the payroll register. It's going to have the employee's earning record and prior pay period checks, paycheck stub. So this is an example of the information that's going to be at the top of the check, and then this is going to be the bottom of the check. It's just going to outline all of the different deductions. So you're going to enter the earnings information from the payroll register and the employee's time card. So you can see this is everything we did in 12.1 goes on the check here. The total earnings that we determined goes here. Then we're going to have the current information of all of the deductions that were taken. And then we're going to update it with year to date. So, in order to do this, and this is the tricky part, you're taking the previous year to date information from the previous check, you're adding it with the current to get the updated. Okay. And I'll go over that with you a little bit more in the work together. But it's the previous year to date plus the current is going to give you the new year to date. Okay. And then you can then from there prepare the payroll check for the total net pay that is listed here. Now, some people don't get a check, they have direct deposit. So, for example, I have direct deposit, but then I get the stub at the top that tells me all of the different deductions that were taken. So, the direct deposit is the payment of an employee's net pay using an electronic funds transfer. If an employee requests a direct deposit, their net pay is just going to deposit right into the bank account, and then they'll receive a printed or electronic statement of earnings and deductions that supports the amount deposited. So I personally don't even have the option to not have direct deposit. Everyone in our school has direct deposit, and then the statement of earnings is going to be delivered to us electronically every pay period. This is an example of a printed example for an electronic funds transfer. You just get the top, the earnings statement, and then at the bottom there's a fictitious check. And this part actually isn't even provided to me. It just kind of depends on your company and who's doing your payroll.